This is part 2 of the March the 1st blog, and I'm just going to deal with the second question that I got, and this is from Rob Hergenmiller, and what he says is, how much can I buy if I have $250 in my account with leverage of 100 to 1? What are the risks? Okay, well, there's quite a few things here. First of all, the amount of money you have in your account is very low, and so very little needs to really go wrong for it to take your money away. So really you're massively undercapitalized. Combined with that, the platform is giving you 100 to 1 leverage. The vast majority of the retail trading public blow up, and there's two reasons, and both of them are actually in this question. First thing is you don't have enough money to trade with in the first place, and then to actually compound that problem even more, you have huge leverage. I mean, 100 to 1, as far as I'm concerned, is fairly crazy even for a professional trader. So what do you do to get around this? I would say that with $250 and leverage of 100 to 1, the chances are, as soon as you trade, you're probably going to lose all the money. You're going to have to get it perfectly correct to even give yourself any sort of chance. So you'd have two choices really, to either take the money back out again and spend it on something else, or save up some more money so you have significantly more than $250. What you also have to understand is, just because somebody gives you something, it doesn't mean you have to take it. A lot of these platforms, their business model is built around the fact that all the people who trade with them lose money. They don't hedge your trades. They assume that you're going to lose, and they give you lots of leverage, know that you're undercapitalized, and know that you're going to blow up and lose all your money. A lot of them give you some sort of illusion of education, of technical analysis, some sort of understanding of the market. That's really just to a certain extent, is to give some sort of offering, as opposed to just a blind platform, as it were. But they are fully aware that when they've got a leverage of 100 to 1, even the best traders would, there's a good chance that they're going to lose a lot of money. So what you need to do is to look for platforms that have less leverage, or have the discipline to use less leverage. Just to give you an idea, I might have $20,000 in my trading account, and if I was to trade the pound against the dollar, I would only be trading at £3 per point. So if I use a typical 50 tick stop, I'm only risking £150, which is, in a 20,000 account, is not a huge amount of money. It's, it's less than 0.1%. But if the market's moving around, then I think we've talked about it before, about how you don't actually have to make a huge amount of money every day on average to actually build yourself a very good pot. And so it's definitely a case of less is more. In any case, the SEC and the US government are looking at this sort of over leverage, and are proposing, or at the moment it could be, that they could cut leverage down to as low as 10 to 1. I think that's a little bit draconian. I do understand the reasons why, because I think a lot of people are losing money because they don't know the risks, and I think you have to protect the relatively naive or the uneducated. And so I think it's a good thing that there are some strong messages being sent out here, and rules. I think I would prefer leverage at a maximum of around 20 to 25 to 1. I think that would be a little bit more of a compromise. So if you can, make sure you have enough money, and actually remember that less is more. The only reason I would trade £3, a minimum of £3 a point, or 3 times whatever the minimum size is, if I'm trading the actual nominal, like $100,000 or $50,000, is in order to give me flexibility in exits. I like to use 3 different exit methodologies. One of them is very much a day trade, so I take some money out pretty quickly, and then if the trade develops, I want to try and hold that trade for a number of days, and if it's on one of the cross rates, occasionally for weeks as well. So remember, less is more. You've got to have enough money in your account, and it doesn't matter. The reason they are giving you that huge leverage is they know that the odds are very much stacked against you, and that you're going to end up losing all your money. Okay, more next week.